Okay, everybody, welcome back to the weekend video. It's Saturday night here in Ireland, and I am back. I'm back to the rain. Thank God. It's been scorching hot here in this part of the world for the last month, and the farmers are giving out, so it's time to shut them up with a bit of rain. So here we are, uh, back from a nice 2-week sojourn down the south of England, and it was great. It was great fun. Okay, so we've neglected the videos for the last couple of weeks, so it's time to jump back into them with vigor and give a quick overview of where I think we stand um, as of this week. As of Friday's session was the 13th of July, so as of the 13th of July, this is where the markets stand. And let's see how we can orientate ourselves for next week. All right, this is Eurodollar. So over the last few weeks, we've been talking about this contracting triangle in Eurodollar, and so far so good. It's working out quite well. It looks like Friday there we got a final low in wave D. Had been tentatively kind of looking for that for the last couple of days, but we spilled lower a little bit on Friday afternoon and popped back higher again on Friday evening. So this wave 4 triangle looks to be drawing to a close next week. We'll get the short-term invalidation highs on the hourly chart, but suffice to say that let's go over excuse me. Suffice to say that the pattern is pretty conclusively a contracting triangle in a large degree. Fourth wave in green there, so we've got 4 waves of 5 almost complete. Wave 1 down, wave 2 up, the large excuse me, the large decline in April and May there was wave 3, obviously. That's the longest and strongest wave. And you get this contracting range around the 116 kind of pivot level. Central kind of oscillation level of about 116, maybe 116.50. And that's coming to a close with 5 internal 3-wave moves, and we should get a 5-wave decline out of the eventual high in wave 4, which should happen next week. Okay, so let's get into the short-term chart. This is the hourly chart, and here you can see the 5-wave contracting triangle, A, B, C. Over the last week, it's been 3 waves down in D, and now we should see 3 waves up in E. And the price in wave E should not break 117.90. So that's the short-term invalidation level there, 117.90. If we get a break of that, then we'll see that wave 4 is probably, or would likely be breaking out into a slightly more complex, if it isn't already complex enough, but more complex pattern. The upper resistance there, 119.94. So that was the previous fourth wave. Yes, their previous fourth wave of 1 lesser degree. So about 120 there would be the next resistance level if 117.90 breaks. Okay, so for next week, I want to see this 3-wave pattern complete in wave E below 117.90, and then we should look for short-term Elliott Wave signal off that high. Okay, so that's Eurodollar. So let's get to pound dollar. This is the 4-hour chart in pound dollar. And you can see that we're still kind of between two stools here on pound dollar. And this week's action hasn't really helped a whole lot. I'm kind of toying with the idea that this is also a 4th wave possible triangle again. So probably mark that in now as an alternate count. So let's get that in there. So if that were the case, much like Eurodollar, you would see a further contraction in range over the next week, complete a possible 1 degree lower 4th wave, rather than, as is marked right now, a possible 2nd wave. Okay, so let's get into the shorter term chart. again, on, let's say, the 30,000 foot view for the moment, pound dollar has topped out at a very large degree fourth wave. That's the wave 4 blue in brackets here. That was way back in ancient history there, 17th of April. What was it, 18th of April, something like that. 17th of April. And from there, from that high, we're tracking a possible 1-2 off the high, or a continuing 5-wave move off the high, depending on which way you want to come. So let's go to the hourly chart. Right now, here's the short-term alternate, would be a larger degree wave 2. As I said, on the 4-hour chart, you could also, as with Eurodollar, you could also possibly view this as some sort of a contracting range triangle, which is not totally out of the water. Let's see if let's say if we had a 3-wave move off Friday's low, so that would be, let's see, the low was 131.15. So if we had a 3-wave move off that low to complete under that declining trend channel, well, then we'd probably look for we'd probably change to the contracting triangle idea. For the moment, I think it's probably still safe to be quite bearish either way. The only caveat to that would be if this large degree second wave actually played out. Either way, on Monday, I want to see 133.62. I want to see that previous level hold. If the contracting triangle idea is the actual wave count, well, then we want to see that. Let's say that would be wave E happening here. So we want to see maybe 133.30 hold. Initial resistance 133.62. So early next week, I want to see that initial resistance hold, and probably a further impulse wave to the downside. So we're still kind of between two stools on pound dollar. It's not as clear as euro dollar, but these things, as corrections kind of come to a head, well, then that's when these things usually tend to clear up. So there's a few alternates that we'll watch early next week, possibly eyeing an opportunity towards the end of next week in pound dollar also, as with euro dollar. Okay, so let's get to dollar yen. So we've had a further rally up in dollar yen. We had this alternate count of a possible larger degree wave 2, but that was kind of blown out of the water this week with the nice bullish action that we had. A nice step in the right direction. So we've had a wave 1 in grey complete, and a wave 2 in grey complete. So what we're looking at here is a third wave up, and the price action is kind of is fitting that at the moment anyway. So we've got a wave 3 in grey underway at the moment. The next significant level of resistance in the 4-hour chart is about 114.70. So the high 114s would be the next kind of target level to look at. We're not far off that now at the moment. On Friday, we reached a high of, what did we reach? 112.79. So we were looking for a third wave to kind of top out over this rising trend channel. It did that. So now we should see a 3-wave pattern decline in a possible wave 4 pink. So in the short term, I want to see this high at wave 1 pink. I want to see that hold. So that would be 111.35. I want to see that high remain untouched. 3-wave corrective decline complete, and a further impulse wave upwards, or 5-wave rally upwards to complete wave 3. So we'd have wave 1 in green complete, wave 2 in green complete. Now we're working on wave 3 in green, which will break out, subdivide into 1, 2, 3, 4, and 5. So wave 3 in green should, let's actually move this. Let's move this trend channel. Wave 3 in green should bring us out above probably 114. It's a decent target to have. The previous resistance at 114. So for next week, early next week, this three-wave corrective pattern in wave 4 in pink, probably complete by Monday evening, and we want to see it remain above probably 112, or let's say the high 111s anyway. Possibly above 112 would be nice. So that's early next week in dollar yen. So let's move on to stocks. We're still working at a 1-2-1-2 pattern in the Dow. We have a pretty decent rally this week, which has kind of extended the corrective pattern that I've been looking at, probably to the nth of degree of its ability to extend right now. So we can see the bullishness is again matching previous highs here on the 4-hour chart. We have even a higher degree actually than the previous wave 2 high here. So we have MACD topping out and creating lower highs, RSI topping out and creating lower highs on the RSI. We have a lower price, so again we're looking at lower highs with higher bullishness, which is, to me, it's a pretty significant sell signal. But we have to wait for the short-term action to kind of confirm that, or price action to confirm that, the momentum signals. Okay, so let's get down to the hourly chart. I'm working with a possible type of a flat pattern. So 3 waves in A, you could call it a combination wave as well, but 3 waves up in A, B, C, D, E, triangle wave B, then 1, 2, 3, 4, and 5. This 4th wave here kind of caused a bit of confusion earlier on in the week, so I think it's an expanded flat pattern now. So you had 3 waves down, A, B, and then a 5-wave pattern in wave C, which resulted in a further high on Friday there in wave 5. So we have 3 waves up in A, triangle wave B, and 5 waves in wave C, and that completes wave 2. So I want to see that recent high there, marked wave 2 in blue. That high comes in at 25,408. So I want to see 25,400 to be. We pretty much want to see an immediate decline on Monday, more or less, but definitely don't want to see a break at 25,408. Okay, so for early Monday, I want to see the or sort of, let's say for the early part of next week, I want to see kind of a right-hand shoulder develop on this and an impulse wave to the downside again. And again, if you look at the 4-hour chart, we have this smaller degree kind of head and shoulders pattern developing quite nicely here off the wave, or around the wave 2 high. So you have a left-hand shoulder, the neckline, the head, the right-hand neckline, shoulder, and we should start to spill down into the larger degree 3rd wave there. Okay, so early next week we want to see a sell signal develop in stocks. Okay, so here we have gold. So gold has kind of been the bane of my life for the last while. I still think we're in a correction. I've changed to the alternate account, which I kind of voiced earlier on in the week here. It's still a second wave to correction with the slight break on Friday. We're looking at a larger degree second wave correction. So of the what date was that high? That was the September 17 high. So we're talking about almost a year of corrective action here now, which is mind-bending in a way. So the wave 1 in red here. Now we're pretty much complete a wave 2 in red, which is the alternate count for a while now. So we have 3 waves down in A, 3 waves up in B, and a possible 3 waves down. So you're talking about maybe a double combination wave 2, where it's a 3, 3, and a 3 pattern to complete the correction. So that's the 4-hour chart. On the key support here on the 4-hour chart moves to 1204, which was the previous low of the wave 1. So I think now that we're pretty much actually on the 4-hour chart here, we're getting bullish momentum signals with higher lows off the most extreme recent extreme negative momentum. That was probably early June there, was it? Get a date on that. Sorry, late June, 20th of June. So now we've got an initial break of the center line. We've got a possible creating a higher low, definitely a higher low in RSI, but you can see the MACD line there now is flattening out and beginning to, let's say, move towards the center line again. So I think we're looking bullish on the 4-hour chart. Let's get to the daily chart because I think that is looking incredibly bullish at the moment. You can see the daily chart has bottomed out at an extreme, probably a 2-year extreme now, in negative momentum on the daily chart. And we've got a nice bottom on both, a lot higher low on RSI, and nice bottom complete on the MACD line there. And it's starting to rise off extreme oversold positions. So daily and 4-hour, we're looking at positive momentum signals. Obviously, this correction has been a hard one to swallow, but it's still, to me, it's still a correction. And to me, I don't think I see anything else but a positive end to the year for gold. Definitely, when you take into account the way the market is just so drenched in negativity and in just bearishness. Nobody can see a rally in gold happening, and that's why I see a rally in gold happening. So there's my how would you say, my ever-present contrarian mind is on display right now in gold. I'm a buyer, okay? And that's that. So on the short-term chart, we had this possible 1-2 off the low. That obviously hasn't worked out. We're going to have to wait for a final low to appear. I'm kind of concentrating on the 4-hour chart now for the moment. So early next week, let's see if we get another pop off the low to see if we can work with a bullish pattern or work with an impulse wave off the low. All right, let's move on to crude. Okay, here's the 4-hour chart in crude. I think we're still looking at a top, a large degree top in a wave 4 here off the recent high. We had previously thought that most extreme high at 72.90 was a wave 4 because we got a nice decline off that high. But again, the rally over the last few weeks has been, well, it invalidated that previous view. And now again, we're seeing, as you could see, as we pointed out in stocks there a while ago, you can see a possible development of a head and shoulders pattern here in crude oil. So on the 4-hour chart, you can see a left hand shoulder, the neckline, a nice head appearing here, and a right neckline, and possibly a right shoulder will develop over the next couple of weeks. So I think we have seen the end to the highs in crude. Again, the flip side of gold, the gold market right now, is the crude market, because everybody's so damn bullish. Like, and you can say that for stocks too, actually. So when everybody's run to the same side of the boat, I tend to jump off the other side altogether completely, because you can just see the boat tipping over. So we had a higher degree bullishness at the recent high, bullish momentum at the recent high than the previous high. So again, that kind of speaks to a higher degree top forming, and we're looking at charting a 5-wave pattern off that high. So into the hourly chart, I think we've got the beginnings of that 5-wave pattern working out in our favor. We may have wave 3 in pink here complete. I'm not quite sure about that yet. And that would say, if that's the case, then if this is wave 3 in pink, that would be wave 4 in pink. You can see it's a 3-wave corrective rise off the Thursday low. I'm going to leave it as is for the moment because I think we should get an extension lower in the third wave, but that's up for grabs early next week. Looking at, I want to see it 5 waves down in gray labels here in wave 1 in gray here before we start getting seriously bearish on crude again. But so far so good. We may have a 1 2 1 2 3 4 5, so we could get we could be seeing an extending third wave happening right now. If Monday opens with further selling throughout Monday, if we get further selling to new lows, let's say below 67, well then that would favor the immediately bearish outlook. So we're looking for 5 waves down, followed by a 3-wave corrective rise, and that's let's say the outlook for the next minimum a week anyway. So awaiting a larger degree sell signal in crude oil. Okay, so that kind of wraps it up. The 6 markets. I want to thank you all of you who replied to my mini survey that I sent out there, or the question regarding markets that I should add to the service. Thank you all for getting back to me. Anyone who has forgotten about it, I would appreciate your input. That wraps it up for Saturday evening on a wet and a welcome wet west coast of Ireland. We'll see you all Monday evening again, and Godspeed. Have a good one. Bye-bye.